If you're looking for something new within the precious metal space, we are the newest producer of silver and gold. We purchased the Cubo Mine in Guanajuato, central Mexico, in April of last year. At that point, we started the process of restarting the mine. We started mining in August of last year, processing in September, and we produced our first precious metal concentrate in October. That entire process was, as you see here, on track, on time, on budget. That's our mantra. We're saying it over and over again. It's been working for us to this point. In 2021, for essentially November, December, we sold 200,000 ounces of silver equivalent, all leading us now to this projected outcome of 1.8 million silver equivalent ounces for 2022 this year. In fact, we hope to reach a run rate of over 2 million silver equivalent ounces by the end of the year. These are silver equivalent ounces. They run in terms of value, silver over gold, 60-40, and there's nothing else here in terms of other metals. We are a pure precious metal producer. As Gilbert mentioned, there's two mines in play here, El Cubo, where we're producing now, and Pinguico, which we're advancing to restart. And that's what you're purchasing if you become a shareholder of Guanajuato Silver. We are a company that revitalizes, revamps, restarts older mines in the Guanajuato region and brings them back to optimal production. And we're located right in the heart of one of the world's great silver gold districts, Guanajuato. We are surrounded by past and present producing precious metal operations. Some of these mines are genuine monuments to the silver mining industry. Mines like Valenciana, for example, which at one time was responsible for 2/3 of the global silver production. We're surrounded by these opportunities. We are exactly where we want to be, which is why we're called Guanajuato Silver. This is a look at the El Cubo mine. It is a high-grade epithermal vein underground mine. The processing here is very standard. We crush, we grind. You see the flotation apparatus in the foreground, and then we produce a precious metal concentrate for sale. It's a big mine. It's got almost 25 kilometers of underground workings, and it's a long-lived mine. It's got almost 200 years of continuous operations. Now, Endeavour Silver purchased El Cubo back in 2012, and they put significant upgrades into the operation. They mined until 2019, and then they put the mine on care and maintenance. So the question here we often get is, why did they stop mining in 2019? And why did they sell us this asset for $15 million? It's a $200 million asset. They sold it to us for $15 million. What happened? The issue has to do with the mill. Endeavour built a mill which was essentially too big for this mining operation. Endeavour's a big company. They felt the best way to get return on this asset was to operate a large mill at full capacity. You see the capacity here, 50,000 tons per month. The problem with that rate is that it doesn't give you a lot of time to look around and make strategic decisions on where you're going to mine next. It's actually set you up for a situation where you could run out of ore. And also to achieve that rate, they used a minimum vein cutoff of 2.6 meters. The average vein here at Guanajuato is only 1.5 meters. So that meant a lot of waste, a lot of dilution was going into the mill. So whereas Endeavour was mining for volume, what we're going to do is we're going to mine for profitability. We're going to do a couple of things. We're going to first slow things down. We're going to operate at about half capacity in the mill, around 25 to 30,000 tons per month. And that's going to give us lots of time to look around and make good decisions on where we should mine next. And we're also going to use a much more narrow minimum vein cutoff of 1.4 meters, which means less waste, less dilution, less tailings, which is very important, and less cost per ounce produced. That is the winning strategy that we feel is going to work at El Cubo. That's a look at the interior of the mill. If any of you were to come down for a site visit, and that could be arranged, you would note that most of the complex looks brand new, especially the mill itself. You're looking in the foreground, that's a ball mill in the foreground. There are 3 primary ball mills. It's all clean, it's dry, it's organized, it's ready to go, and we're producing as we speak. So look underground at Vio Pando. So Vio Pando is the primary vein at El Cubo. What you're looking at there are the colorful shapes. Those are the stopes. Those are the areas that we're mining right now. We're mining 1850 stope, that little stope in the middle. And what I want to focus on here is just getting back to the new strategy that we've brought to El Cubo, focusing in on minimum vein width cutoff. Now, if you look at one of these drill holes, so all the red dots are holes that were previously drilled by Endeavor. And if you look at one of those, like CAS 50, now you could mine this over 4 meters. And Endeavor would have been doing that. They would have been doing it mechanically. They would have been using big equipment. And in today's silver price, you probably would make money. Alternatively, we're going to mine much more selectively. We're going to use much smaller equipment. We're going to use cut and fill techniques and rescue mining. Essentially, we're going to carve out that vein, which means, again, less waste, less dilution, less tailings, less cost per ounce produced. The other upside here is that when you bring down the minimum vein cutoff, it actually opens up a lot more resources to you. Whereas Endeavor would have looked at these stopes and they would say, well, there's about 30,000 tons to be mined here. When we look at these stopes, we see over 200,000 tons to be mined. So that's a big upside. It's a big difference. And again, we believe we're bringing a winning strategy here to El Cubo. Staying underground, this is a look at the primary veins in the area. I just showed you the Vio Pando. So those stopes I just showed you on the left side of the screen. There is another primary vein called Dolores. These primary veins run north-northwest. But what I want to highlight here is we also have what are called transverse veins. And these veins cut perpendicular to the primary veins, and they run much higher in terms of gold content. Now, they're more narrow, and because they're more narrow, they never would have factored into Endeavor's resource model. However, we think these are going to be a big part of our future, and we're mining them now. We're actually mining in the Santa Cecilia zone. Again, staying underground, this is the Vio Pando vein itself, highly brecciated, high-grade material. In order to be successful at chasing narrow, high-grade veins, you've got to have the expertise in place. Good for us. The Mexicans are the best in the world at chasing narrow, high-grade epithermal veins. This is a look at Hernan Dorado. He's our COO. He is a mining engineer. He's worked all over the world, and now he's come back to Guanajuato. And so, yes, we've got the technical excellence to be successful underground at El Cubo. And one of the reasons we're able to attract top talent to our project is because we're located only 45-minute drive from downtown Guanajuato. Now, I expect that most people on this call have never been to Guanajuato. Perhaps you've never even heard of the city. And that's a shame because it is worth visiting. It's a beautiful colonial city oozing with culture and amenities, lots of things to see and do. So if you're a miner looking to work on a project, you can choose to work on a project where you're flown into some remote location for 2 weeks at a time, or you can work at our project and every night you can drive home and enjoy the amenities of Guanajuato. The city also has a university. It's the big gray building in the middle of the photo here. The University of Guanajuato has one of the best mining schools in the country, and about 50 of our employees are graduates of the University of Guanajuato, including Hernan Dorado, our COO. So in addition to picking up the El Cubo mine, the transaction also included a very large exploration package. We are one of the largest holders now of exploration tenements within Guanajuato. And that's important and that's really good because, again, we believe Guanajuato is right time, right place. We're exactly where we want to be. And we believe that one of the best exploration projects in Guanajuato today is the Pinguico Mine. So this is our second mine. It's about 5 miles south of El Cubo. At one time in the past, it was the highest grade silver mine in Guanajuato. It was listed on the New York Stock Exchange. It paid dividends. Now, in 1913, the operations were shut down because of the Mexican revolutions. And remarkably, it's been on hiatus ever since. So what are we doing here today? Today, we're conducting a methodical drill program to define a maiden resource. There's no historical resource here today. So we're working on that. The program we hope will wrap up in this quarter. And at that point, we will look to define a maiden resource and quickly extrapolate a mine plan so that we can move material from Pingrico up the road to El Cubo for processing. Remember, we've got a mill up there. It's running at half capacity. We want to take advantage of that. In addition to this drill program, there's a very exciting drill target. This is a regional view of the area of Guanajuato. The primary vein in Guanajuato is called the Veta Madre, or Mother Vein. This is a massive multi-pulse system. It's responsible for many major mines, such as Valenciana, which I mentioned earlier. Now, our Pingrico project, you see it there at the bottom, it does not actually sit on the Veta Madre, but the Pingrico vein itself runs into, it collides with the Veta Madre. And that intersection point is a very exciting drill target. We hope to drill that in April of this year, and it is a genuine game changer, or potential game changer. Pingrico also has two stockpiles. There's an above ground stockpile and a below ground stockpile. We're looking obviously at the above ground stockpile here. In the early 1900s, this would have been considered waste. It's not waste today. And what we're doing now is we are moving this material up the road to El Cubo for processing. We just put it on a truck. It's very inexpensive, and we transport it up the road to our mill for processing. As we move into the future, we envision, when you're looking at the material that's being processed at El Cubo, about a third of it will come from Villa Pando at El Cubo, a third of it will come from these transverse veins at Santa Cecilia, and then another third will come from the stockpiles here at Pingrico. We have the below ground stockpile. We haven't actually figured out exactly how we're going to access that material yet. We will. But it is not waste. It never was waste. It runs about 3 times the grade of the above ground stockpile. And both of these stockpiles represent oxygen for the mill up at El Cubo, ensuring that there is material available to it for processing. Look at our PEA numbers. The first thing to note is that we did jump directly from PEA to production. That's not common within the junior mining space. Most junior mining companies, they're in the business of just writing reports. You can spend a lot of time and a lot of money trying to drill out a resource for a narrow, high-grade vein system. Or if you're lucky enough to have a mill, like we do, you can mine it. So that's what we're doing. We're mining. Because it's a PEA, because of the nature of our deposit, we only get credit for the first 7 years of mining here. But we believe this is going to be a long-lived, multi-decade mine. There's no reason that it can end up that way. And our goal is to end every year with more ore in front of us than we started the year with. The internal rate of return, very sensitive to the silver price. At today's prices, our IRR is somewhere around 300-400%. And you can see the operating costs there. We want to get as close to that number as we can, giving us as big a margin as possible. And of course, in mining, and I know this is a cliche, it shouldn't be a cliche because it's the most true thing there is in mining. In mining, margin is king. Because we only paid $15 million for a $200 million asset, our shares intact, we've achieved producer status. We hope to go cash flow positive in Q2, but we haven't blown out the share structure to get there. We did close a financing in December of last year for 9.5 million Canadian. Today in the treasury, there's around 6 million US in our treasury. The share chart itself, it reflects, well, it certainly reflects the volatility of the silver price. It also reflects exactly where we are in the life cycle of a junior mining company. We've achieved producer status. It's a fantastic, very important milestone, but it's also a milestone that comes with risks. As we continue over the coming weeks and months to demonstrate that we can produce silver and gold profitably, then we would expect a re-rating as we go forward. This is a look at the major shareholders of the company. Endeavour Shareholders, the largest shareholder. Of the $15 million that we paid for El Cubo, $5 million of that was taken up in shares. That's how they acquired their position. I know I'm running short on time, so I'm not going to go through all of these firms, but I will highlight that I just mentioned we did a financing. It closed in December. Endeavor was the lead order on that financing, and every single every single entity on this list, other than one, participated in that financing. So yes, we have great support from our current shareholders, and by virtue of them repeating or continuing to reinvest in Guanajuato Silver, it certainly demonstrates that they appreciate how we are building this business. And all of these entities, the mining knowledge represented here, it's a major endorsement for the quality of our projects and the ability of our management team to execute. And if you were to ask any of these firms, why are they invested in Guanajuato Silver, they would all say the same thing. It's all because of this guy right here, James Anderson. So James Anderson has decades of capital markets experience. He's a deal maker. And that's important because, as I said off the top, we're surrounded by past and present producing operations, some of them private, some of them public. We do believe that M&A activity is going to be a big part of our future. We view El Cubo as a platform from which to expand within the Guanajuato region. And that, I believe, will be a big part of our story in 2022. So on that note, I will open it up to questions.
So just a few questions here. First one directing to you from Mackenzie is asking, do you think you're undervalued and why?
Oh, I would say that we're undervalued. I think we represent great value today at sub 50 cents Canadian. I think that there's a couple of ways to answer that. I do believe, as I said in the presentation, that we're in this moment where there is risk associated with the ramp-up phase. And what I think investors are waiting for are to see the hard numbers. What are the numbers coming out of this ramp-up? And we are closing in on being able to release those and share those with the investment community. I also think that in terms of future value, we are not going to ultimately be about El Cubo. So if I just mention my own personal story, I joined this company in September of last year. I did it because I really like James Anderson. Everyone likes James Anderson. But I also did it because his vision is a much larger one in terms of growth within the Guanajuato region. And I do believe that by the end of this year, we will be a much bigger, much stronger company.
Okay, the second question from Ralph. Do you ever need to worry about cartels there in Mexico?
Well, no, I think this is one of the problems with Mexico, I think, is that most investors outside of Mexico, Canadians, for example, their knowledge of Mexico probably doesn't extend beyond the television show Narcos. So we have not actually had any issues at all. I will highlight one of the reasons that I was keen to join Guanajuato Silver was because we produce a concentrate. So we're not producing gold bars and silver bars and transporting those all over the place. We actually produce a concentrate and drive that to the offtake partner, and at that point it's shipped off to some smelter somewhere. So I do believe that does limit the risk. So at this point, I've only been to Guanajuato one time. My overall impression was it was one of the safest places I've ever been in my life. We just haven't had any issues on that side, but I think there are many challenges that face mining companies. Doesn't matter where you're located in the world, you're going to have challenges, and that's just one of them that we've got to deal with.
Thank you again for being here with us. Really appreciate your effort here today.
Thanks, Gilbert. It's been good seeing you. And again, anyone that's heard anything that interests them today, I hope you'll reach out and start a conversation with the newest precious metal producer, Guanajuato Silver.
Definitely. Thank you.